Welcome back, ladies and gentlemen. We're going to be talking about relative strength. We're going to be talking about trend lines, and we're going to be talking about profit targets. Now, if you don't have this profit target indicator, you could get it if you join my Patreon. It's a custom script that I developed. It basically just gets me my profit target. It's simple as that. I don't have to do any math. Right as soon as there's a breakout, all I have to do is just execute the trade, and it will tell me where my profit target is, so I can essentially very quickly see the range of that candle, and I can calculate how much I have to enter in terms of size to keep my risk to reward correct. All right, so we go ahead and we're just going to talk about all these different concepts, and we're going to converge them all into this video. And it's not going to be just about Google. It's going to be about multiple stocks in this one video. I'm not going to make multiple videos on specifically today. I want to basically combine everything with SPY, with all the moments that have already happened today on Friday. Okay. Now, Fridays, I will always say they're like almost like the worst days to trade because the stocks can become very choppy. And a lot of people, they don't want to hold over the weekend. So you're not going to see a lot of price action as much as you would on a Monday. Typically, in my experience, Mondays are your best days to go long on a stock or go short on a stock because that's when volatility is nice and fresh and people are willing to hold their position for more than a day. And usually the trend continues in that direction, if assuming that you actually read the trend correctly, because I know a lot of people are like, oh, I could just buy a call on a Monday and I'll be good, or I could just buy a put on Monday and I'll be all good. No, if the trend is not in your favor, the overall trend, not the intraday, the overall trend is not in your favor, you're more than likely going to lose money, okay? Just common sense. Just apply common sense to your trading, okay? You don't have a boss to tell you, hey, that's stupid, don't do that. You just have yourself. So, trading's not for everybody. So we're going to take a look over here, and we're going to talk about relative strength at first, and then we'll talk about, the trend line and, profit targets, so on and so forth. So over here, we can see that SPY, it has pushed higher at open, and what has Google done at open? It pushed higher, consolidated, and then dropped down. Over here, we have a push higher, consolidation, and push up. So this essentially did the opposite of what SPY is doing. However, as SPY really put in this igniting candle, Google started to push higher. However, we're also below the prior day's high, so we don't want to take that trade. So when we have this nice pullback, it looks great, maybe we can break out and continue higher, but I like confirmation. So I'm not going to enter right on the very first breakout. I never do that. It's not a fun time, not an easy trade. Sometimes it will spike and it will go down, and you'll see plenty of examples, and I'll literally show you right now. So assuming you entered on this breakout, which if you look over to the left, the high was 385.85. Well, we broke that right over here just by a few pennies. We went to a high of 386.30. So it broke out. It should have worked out for us, but it didn't. Instead, it moved down. So if you entered on this breakout, you would have had to stop out, and you have been screwed on that trade. Had you entered on this trade, your profit target's all the way up here at 387.33, and you wouldn't have made profit either. So regardless of how you traded this, either entry, you would have lost money because the stock went back down. All right, that sucks. But you're within the prior day's range, so you should expect that you're going to get chopped up. So now we pushed up again, and then a nice little pullback, and then we pushed higher. Now look, we broke the high again on this green candle. But am I going to enter on that? No. I want to see consolidation. Okay, look at this red candle right here. Nice consolidation right here, right? So when it breaks this candle, when the next candle breaks this candle's high, I want to go long. Oh man, I just saved myself one hell of a headache. Because guess what? It instead went down. So you could see how you need to bring multiple concepts in order to prevent yourself from overtrading and basically screwing yourself over, to be honest. You see a false breakout here, a false breakout here, and you would have had to stop out in both instances. Now you could take some scalps over here, but that's kind of making up a trade. A chart that is very easy to trade does not provide much of a pullback. does not give you much of an opportunity to enter. So if a stock is dropping and it's giving you another opportunity to enter even lower than where you would have entered, chances are that stock is not trending. Okay? It's not trending. And you probably should not be taking that trade if it's entering down, if it's giving you that entry. Obviously, hindsight, you can see over here, you were like, oh, well, if I entered here and let's just say I randomly sold over here, not based off of any profit target, let's just say I randomly sold over here, yeah, fat chance. You see a breakout, you're probably going to be holding, and then you're going to hold as it drops down here. And guess what? This profit target over here, let me just go ahead and just draw a line, a horizontal line at that profit target mark, which is right here. So if you entered on this candle's breakout, which would be extremely risky, by the way, you don't want to enter on this breakout because one, it's already stopped you out with a false breakout over here, and two, it's basically broken this pivot low. All right, a nice clear uptrend would go up in your favor constantly. Okay, it would go up, nice little pullback, and then keep going higher. This, it went up, nice little pullback, went higher, performed a false breakout, and then went all the way under the higher low. That is not a trend. That's not something you want to take a trade in. That's not so, even though in this case, obviously, as you could see, it would have worked out if you had you been watching the stock at this time. But you know, that's not always going to be the case. So until we break and we form a nice, clear, consistent either higher low, a nice smooth curl, higher low, or we form a consolidation level where I can have appropriate risk above the breakout, I don't want to take that trade. And we can clearly see that this day has been nothing but chop. It moved up, got close to that same level for a breakout. Sorry, it actually went above that breakout level again using the prior day. Let's just draw a horizontal line just so you guys can see that as well. All right, you could see how many false breakouts you had. You had a 1, 2, 3. All right, none of this is great. Obviously, this one wouldn't have triggered you in because guess what? These two candles over here, neither of them would have triggered a break of the prior bar's high. Okay, so as a result, you essentially have dodged 3 bullets, and then it started to go down. Right now, it's pushing up probably because SPY's pushing. Yep, SPY's pushing up. So you've dodged multiple bullets here, and there was really no trade. There was no trend. So now that we have all that information, let's take a look at what SPY did during this whole time. We have a push higher, same push as over here, drops down, which caused this to also sell off, and then it pushed higher, and this one also grinded likewise, and then just created a lower high. As soon as this candle broke, it created a lower high, and what we're going to expect is any bounce will just create another lower high because we've already essentially cracked the lows. So what you would do is you take the rate tool, connect that high to that high because you already have the information and you don't expect that the SPY is going to trade above this basically until it does and it forms a higher low above that. So now that we have this information, all we're doing is we're just trading the fact that SPY is weak right now. This stock is consolidating, and once this stock decides that it wants to give up after performing 3 false breakouts, sorry, the platform crashed. Once this stock decides that after performing 3 false breakouts, it does not want to continue higher, then that's it. It doesn't want to continue higher. So as you can see, it started to sell off. It performed a high, a lower high, a lower high, and a lower low. Here's your low, lower low, another lower low, a lower high, potentially over here, maybe. We'll see if it can break that high. If it does, then it invalidates any lower highs, and we could be potentially on the start of an uptrend, uptrend back up. But I would not hold my breath. I would lean bearish. But right now it's like 3 o'clock in the afternoon, so I'm not going to try to expect that it's going to suddenly break out and then go all the way to like 390 or whatever. It's Friday. Nobody wants to hold a trade over the weekend. And so that's it. So now that we've analyzed Google and we've clearly seen that the market is showing weakness, Google is also showing weakness, everything is showing weakness, They're both in alignment. They're not one's not relatively strong, so we do not want to take a trade here because it's basically in line with the market. All right, let's go ahead and take a look at another stock, Amazon. So today, market ran up, consolidated. What did Amazon do? Just consolidated. Market ran up, and Amazon really started running. All right, it really started running. And this is one of those times where you're just like, it's not giving me an entry over here. What am I supposed to do? And so you just get very frustrated because it's not providing an entry. And these kinds of days will happen. And that's why I want to point that out in this video as well. You guys need to be able to be comfortable with the fact that some stocks, they'll just run without you and they will not perform the nice smooth move that you want it to do. Okay? I could obviously go down to a lower time frame and probably there's an entry to scalp out. But I prefer the 5 minute because I like a nice, calm, relaxed chart. I like one that's moving higher, smoothly. I don't like something that's just rapidly running because what ends up happening is whenever you see a stock that runs in the first 5 minutes of the day, just runs straight up or it drops straight down, typically it just kills the rest of the move for the whole day. And sometimes it even reverses. So you may chase this and enter and then it just starts suddenly dropping. You know, so that's something that I wanted to also show you guys. Like, okay, well the market was strong. This one was super strong because even during the drop, Amazon did not care. It continued. So when you look at this, you're like, man, Amazon's really strong. But if you haven't forgotten, I've also done an ATR video last week about, you know, what's your expected move on the day because every single stock has their own average trading range. Not every single stock is going to be trading $15 in range or $5 in range or $100 in range. And believe me, there's some stocks that trade $100 in range. So whenever you look at any stock, you always want to add this ATR right here. And you want to go to the daily chart to find out what the ATR is. So for this specific day, it says $7.50. So when we look at today's range, it was $10.54. So if you were to chase this, let's say you were to go intraday and chase this, you go to the opening price, and that's over here at 265.43, and you have a $7.50 range. That's going to be 273, something like that, 272 maybe. That's going to be the maximum range it's going to trade, or that you should expect it to trade. However, the problem here is when you're entering, you don't know that it's actually going to go to that extreme high. You see the low of this day is all the way down here at 262.75. Now, if you add $7.50 to that, that's going to be, what is it, 270, something like that, around 270. So if you're entering over here at 268.10, 270 is only $2 away. But in this case, it worked out. It ran all the way to 273.53. So you want to always adjust the ATR based off of the high and lows of the day because, stuff will change. When it's right out the gates, obviously you don't have any information. All you can do is take the ATR, add it and subtract it from the opening price, and that's the max range of the day. But if the stock goes lower at the beginning of the day, you have to now decrease your upper band of where the stock can trade because it's already extended down to the downside, maybe $3. Maybe it went the full $7.50. So now the highest the stock can go on that day is the opening bell price. And that will be a very long V-shaped recovery, which I have not seen in a long time, by the way. In a very long time, probably already like 3 years, I haven't seen a V-shaped recovery on any stock chart anymore. They usually either go straight down, straight up, or sideways. That's pretty much it. So this is something I wanted to just like talk to you guys about. This is obviously not going to be what happens every single day. but you need to be fine with not taking a trade at some occasions. You need to be very selective if you want to be able to trade essentially a set plan. You want to be able to trade, without emotions. You want to trade with confidence. All right. If you want to hack around, by all means, go ahead, chase it. But this isn't penny stocks, so you're more than likely going to get screwed over. All right. Let's go ahead and take a look at another stock, Tesla. All right. This one I already have a trend line because I already alerted this. In the morning, pops up, drops down, and then continues higher. And it respected this trend line for a very long time. I was alerting that it was going to go to 395, 390, 395, but I was also expecting 400 because I could see that there was a lot of pressure building up, especially since it's consolidated for many days. And if we can take a look over here, Tesla was not doing so hot in the morning, okay? In the morning, SPY was running, but Tesla was basically dog shit, okay? It was not doing much. So when it pushed higher all day, it started grinding. I was like, okay, I guess we're going to go to 290, 295, and that's what I alerted. And then I was also talking about how we could potentially also hit the 400 mark. And let's see if we actually hit it. No, we only went to 397. Oh well. Um, it was already super extended on the day. If we look at the ATR again, if we go to the daily chart and we look at the ATR, it's like $15.30. If we go to the low of this day and we add $15.30 to that, I'm not going to do the math over here. I'm not going to try to make a fool of myself. You just take the low of the day, which is 378.91, and you add that $15.30 to it, and that should be like your maximum for the day. And we can see that this did go a little bit higher. I believe it was like $19, $20 higher. So that's essentially how you would take this trade. You have a lot of room to the upside, and as long as it doesn't break this trend line, you're fine to hold on. Obviously, in the middle of the day, I started saying, I'm like, okay, guys, unless we break this 396 level, we can't really expect this to really push up much higher. 395 more so. We need to see a breakout, which would be a late day breakout, if anything, and we can clearly see it broke out, but it can't hold its move. It already ran more than its ATR. It's essentially just going to consolidate and relax, especially since we are on a Friday. Okay, but this is relative strength. Okay, relative strength compared to the market. The market's selling off. The stock is rising all day. Selling off, rising. Just compare the two. Now, if you just trade SPY every single day, you kind of don't have anything you can compare to other than itself. So, kind of putting yourself at a disadvantage there, but it is what it is. I hope this video was very informative. Thank you guys for sticking around. For those of you who have, leave a like down below and a comment down below if you have any issues with the video, or you want a little bit more clarification. Sorry that some of this may seem like I'm droning on. I'm just basically talking about how you need to think, and some people stuck around, some people didn't. All right. Hope to see you guys in our future videos. Later. Thanks for watching. Everything you need to refine these entries is in the Trendline strategy playlist on the left. If your strategy is fine, but your head isn't, the Psychology and Expectation series is right below it. Please go through them. Most traders will watch this and go right back to over-leveraging or chasing candles. Don't be that guy. Fix your approach before you blow another account. Strategy is the easy part. Discipline is the work.